All right, guys, what's happening? We have adjusted screen resolution. Hopefully, you will be able to see more of the Excel sheets I'm working on. Today, we're going to work on the product as a service model integration with the three statement model, updating with new cap table. And this is cool because this is the first upgrade we're doing with a three statement model that has inventory in it. So that's awesome. New logic to do. Before I get into everything, remember subscribe to the YouTube channel, like the video. If you want to support or check out more templates that will be of use to you, check out smarthelping.com. The model we're doing today is part of a software as a service bundle, or you can buy it separately for I think $75. This is one of our top selling templates right here. We've done so far with the integrations, we've done the SaaS model, equipment rental, web app, traffic conversion model, car wash, which we did Monday and Tuesday, which went very smoothly. And now today we're going to do product as a service. Uh, don't forget, you can check out all these different templates. There's things for joint venture cash flow waterfalls, real estate stuff, self storage, mixed use, multifamily. Um, we've got accounting tools, industry specific startup models. This is one of the main categories we're upgrading, as well as the SaaS, human resource tools, lending models. So check over there, see if there's anything. If you use Excel or Google Sheets in your organization, there's likely going to be some value for you here. Don't forget about the template bundles as well. You can buy them by category. They're labeled as mid-level, intermediate, upper tier, or ultra. You can also buy all the templates from the entire site for $849. Or you could buy in bulk by category types as well. And don't forget about the bottom. We got the newly added category personal finance. Some things here for mortgage repayment, new home savings, loan uh, loan modeling for paying off or investing, interest rate swap, all kinds of stuff here. So let's get into the model. And let me check my sound, and also I want to see the new resolution and see if this is better for everybody. Let's see. Smart helping, live, test. Okay, it looks like it's showing. Oh, this is kind of weird. Okay, so you can see the whole screen. That's good. It's also showing. What's it showing behind there? The other workbook? Trying to see what that could be. Hmm. Oh, well, at least. So I don't know why that far, like you see a background of another sheet. It looks like it's actually a copy of what's on right here. Let me see in OBS if I could figure out. Oh, let me turn one of these off. Now what do you see? Okay, so that's the window. Let me just do full display. Sorry, this will just take a sec. Okay, this is good, I think. What's up, guys? Hold on one sec. I'm just trying to update the resolution. So the question is this better or is it better with the window like this? Is the question. I don't know. So this or this. Honestly, I think this one's better. Okay. Well, we're gonna go with this. It's definitely better than what we've been doing because you can see the whole screen. So, first things first, this does have its own index tab already. Control tab's gonna be more of what we're been doing more recent, but it'll have to be updated. Right now, we're going to update all of the formatting here to be blue. Actually, this is going to get a thing. We just need to do the base model. So in this model, product as a service is pretty simple. You're producing or possibly buying a product, or and producing. I don't mean you're the manufacturer. I mean you're sending, orders out to manufacturing plants to build stuff for you, and then you're reselling that at a profit, and you're attaching a software as a service um, product to that. For example, a very common one is the exercise bikes. In like if you sell the exercise bikes at some margin, and then people have the option to pay for some monthly recurring services. There's This is an entire industry. There's a million different examples, but this model will fit anything in general. You got some cost, some units produced. There's some shipping assumptions. What else did I do? For unit sales, there's seasonality. You can define the total percentage of total units produced to actually sell per year, a desired profit margin on those. This is the resulting selling price, and that's based on the unit sales assumptions. And then here for each of the 5 years, you can define the percentage of the expected annual sales that happen in each month. And then you got the subscription services, so you can define the percentage of product sales that convert to monthly subscribers to whatever service is being sold, up to 3 pricing tiers. It doesn't have to be 3. And you got churn, and then defining the percentage of all the new customers that sign up to each pricing tier. And then just general OpEx, startup costs, the CapEx, this will be replaced. These will be pretty similar, and then we'll work off the P&L monthly and annual to build our 3-statement model. So yeah, I think this is great because before you guys weren't able to see like only a little portion of the screen. Now you can see everything I see, which is going to make this whole stream better. So now let's go. We've got the basic overview of what the model does currently. We're now going to do some formatting updates, and then we'll start on the 3-statement modeling. So right now I'm just going to highlight all of really it's just going to be this that's not changing, and the unit sales is not changing. Oh, we'll just put all these as blue text. Oh, it's hard for me to see. I think that's the right one. Do these as well. We'll make the grid lines a bit softer. Line style, I like this one for these. That looks a bit nicer. Financial modeling, if you really want to get good at it and just really look professional, make a lot of money at it, you've got to pay attention to formatting as well as being good at just doing math, checking yourself. Because accuracy is also very obviously important, that the logic is working correctly. So like I said, this will be the first template we have inventory logic in. So I got to go back to the base 3-statement model once we finish doing these real quick, and pull all of that logic for inventory. So it's nice we got it built there. And if you didn't know, what I'm doing is if you highlight and then if you go to another cell and hit control and drag more, you can format multiple cells at one time, multiple ranges. We're just going to do all of this. Oh, and these we actually want to change to light yellow. No reason for these to be different colored. Now the model will allow you flexibility in the timing assumptions. That's one of the main, I would say, value adds I do to templates or have in my templates is very, very flexible and very good timing assumptions for making the model more dynamic. And again, more dynamic means better usability, less likely the user has to make their own updates. That's what the goal is here. We can also do, so let's do one more. So those all have to be sales and marketing for our other metric calculations, but we need to make those labels because you could change obviously the cost labels. And now we can go all light yellow, blue text, and proper. There we go. That looks good. Anything else? So this will stay. CapEx, this is being updated. All right, so that's everything for our formatting. Let's now go to the base three statement model we've been using for all these integrations. Again, this template I'm using is also available at smarthelping.com. Just one-time fee of $45, and it's in the category of accounting tools. So first things first, let's bring over all these income statement, balance sheet, cash flow statement. I'm just going to copy and paste them over, and then we're going to do a find replace to remove the workbook references, and then we can start on the integration. Now, one reason why I have the car wash model up here, and I'll be using that, is because some things on the general three statement base template aren't, it it doesn't have everything that needs to fit some of the different startup models, so I have to use the base three statement for this, and then I'll have to tailor certain parts from other areas, and that's just part of doing this, because this base template is trying to fit as many broad situations as possible, but then these specific ones I'm integrating it to have their own specific, like the global control is a little bit different and on all of them, so I'll use some of this and some from the other thing. But this has all the base logic for the three statements, and we're going to use inventory as well here. So here, and then let me make sure I brought over yep, perfect. Let's make sure we also get the inventory logic. So we want this. There's a bit of couple formulas here to figure out if it's a purchase month based on how often you want to buy inventory, or or purchase it. Now this, yeah, we're gonna have some stuff there. Let me just drop this in. So this is here. We'll definitely use the CapEx tab from here as well. Oh, and this CapEx is pretty nice, and it's just a general. If you have to account for any kind of depreciable expenses that you plan on buying. Let's see, anything else from here we want. We got inventory, debt schedule we don't need, CapEx, investors, we're gonna have a cap table. Okay, so that's good. Let's go into here. Now we want to take the global control from the car wash model. This is a nice basic one. Get all of our checks in there. And then the fun will begin. Let's see. I want to see one thing on this cash flow on the monthly detail. So on here, let's see. Did I zero this out? So we've got amortizing the costs and the shipping. No, I know I did. I think I did a reconciliation. Let's just check. Let's see. So we took. Trying to figure out. So on this for the manufacturing cost of goods sold, like the unit costs, it's just taking the total unit cost divided by 12. And it's taking shipping cost divided by 12 per year. But we have. Did we not? Well, hold on. We might not have inventory here. It looks like it was just amortized over the year. So it's assuming okay, so it's assuming like these unit costs are just paid in the same month that things are sold. So it's not like you're having a bunch of things purchased sitting in inventory for some amount of time, or it's not like you're paying 2 or 3 months ahead of time. Now we could integrate that to get more, like let's say you wanted to assume um, so these cost of goods sold still are recognized in the month of sales, which we'll have to update all this because I changed a lot of the control stuff. So this is, we got to update all the dates and everything. But assuming this cost of goods sold does need to happen here, um, based on the units sold, but the reconciliation for cash flow, let's say you bought 3 months worth of this. I don't know, that'd be because you're not holding any inventory. Well, no, you could order it from the manufacturing plant. Say, okay, I need, you want to make 3 months worth. They ship it over to you, and then you sell it over time. So that current logic is not in here. So that would be an upgrade of inventory purchases, and then not based on some schedule, we would use that logic this logic to determine when it's a purchase or how many months ahead of time you're purchasing things for. And see, yeah, that's what this does here. So we can do that, and it will change the P&L monthly on the base version of this template to it'll zero out the manufacturing cost of goods sold, but then add back the cost whenever you're purchasing. And that'll give us some fun on this three statement models too, because that's, we'll have to think about how that reconciles. All right, so that's good. That's actually a full, I thought we had some inventory stuff on here, but we didn't. So that'll be an improvement in cash planning for this. Now for shipping will be the same deal. Because assuming when you pay for your bulk inventory purchases, if you're paying for multiple months at a time, the shipping happens in the same time. So we'll zero these out, or add these back into cash flow, and then reduce them out in based on our inventory schedule purchasing. All right, so that's good. This will probably, what's today, Thursday? Yeah, we'll probably go into next week on this one because it's going to take a bit to do all that. First though, so for the income statement, we don't care. See, we'll have inventory flow into this row, and that'll basically be the cost of goods sold of which is going to be shipping plus the unit cost. Before I do anything though, we have to do some find and replacing. So first is going to be, this is the thing that saved me a lot of time that I figured out how to do best on like the second integration. But I need to get rid of, see all these references to the other workbook? Those all got to be zeroed out. We'll save this as version 3. Where is my find and replace? I adjusted the resolution, so now things look different here. Sort filter. Oh, is this it? Yeah. All right, so what I want to find is anything that says bracket three statement model, monthly and annual V2. So you'll notice how if you did this, every single reference needs to have a space in it. Otherwise, the two what's that called? Apostrophes would give you an error in the reference, and then it just wouldn't work, and it would be bad. So that was one thing I made sure the base three statement model would be able to do, or easily integrate based on that. All right, replace all. Dang it, what are we missing? Global control, right? So I forgot. So this has got to be global control. All right, let's try this again. There we go, 15,000 replacements. So we're all good there. Let's also do, let's see, on the global control where we're referencing the car wash model. We should be able to zero that out. Oh, actually, we titled those differently. Okay. We'll manually do those. It's not a big deal because it's only on this page. We also have to do the cap table. Let's get that in. So this is a nice cap table template I built where you can have basically you define the minimum equity needed for the whole entire operation here. You can define share count, percentage of common shares, class A and B, and then you could define for outside investors how much they invested, how much share of each stock type do they get, what's their fully diluted ownership share, and then you can also define the same thing for owners, founders, employees, etc. So we're going to put that in here just in case. Now, obviously, not every business is a joint venture that has investors, or you might be the operator that's investing all the money, and that's fine. You would just zero out the outside investors part of it and just fill out the bottom part. That's fine. Freeze panels. Okay, so that's in. We got all our references updated there. All of these references are updated. Nice. This is all linked into the monthly income statement where those cost of goods sold are going to flow to, so that's good. Hooked onto this, basically, you get to find how many months at a time you're paying for inventory, or how many months you're paying it. So if you put 4 in here, it means you're paying today for what you think you're going to sell in the next 4 months, and it'll just keep repeating. That's what all this stuff does here. All right. I think we're ready to get into the income statement now. Let's get this formatted, view this, freeze. Let me check something real quick. Oh, I was in display mode. I don't think you guys could see when I was on smarthelping.com. Let me see. No, I was in display capture, so you guys could. Okay, good. All right, so this is frozen. Reference our date, which we've updated the, so this is really cool. So if you look at the global control, this is an upgrade that every starter model is getting. Is instead of defining the start year as a date, you just define the start year, and then this will give you the first day of that year, and it just makes defining the timing assumptions a lot more clear. We'll call this PaaS LLC. All right, perfect. So we got some dates in here. Let's put this all the way out to 15. Remove the grid lines so we look nice and clean, professional. All right, so we've got all the data for revenues. We're going to have 2 main streams, but let me see how I broke it down over here. Where's it consolidated? Product sales, subscription revenue. Okay, perfect. So 2 streams. Product sales, subscriptions. We'll delete those other extra rows at the very end when we don't care about the row placements. Right now, we definitely care about the row placements. Man, this is really, it took, what is this? This is the 6th iteration, and every time we're getting a little bit faster, a little bit smoother at it, which is awesome, because I got about, another 50 of these to go. But I think it's definitely worth it, and I'm not increasing any of the prices of any templates based on this. I'm just making them all better. And also, I'm also not removing any of the nice base logic that's in all of them. All I'm doing is just adding these financial reports and cap table, as well as just updating some of the formatting. Okay, why is that 0 for everything? Probably because Let's see, probably because our unit sales. Oh, that's fine. Let's update this. Ah, end month. I don't think this is LinkedIn, but we're gonna see anyway. Either way, this has to be updated as well. Oh, also another upgrade to this was we added the. I added the option to include terminal value or not. Yes, no. Instead of just assuming the end month was the terminal value, or if you didn't want one, you could hit NA. So this provided a lot easier formula building for the exit period. Oh shoot, we got to bring this in as well. Let's go to our car wash model to get this. And we'll probably do a terminal. If you do want to show a terminal value, we'll probably base it on a percentage of annualized sales based on the exit or end month. I actually want to keep this logic here. I think it's good. So now all we got to do is change the reference from indexing EBITDA, which is what the other one was based on, to the total sales row. And actually, let's bring in the cap table from here, or CapEx, because this has the reference to, yeah, the yes, no selector in it. Oh, now what did that get caught on? Terminal value, we have that. We have global control. Where's it getting caught up on? So see, all these are replacing fine. I don't know why sometimes it has this issue. I must be trying to go to the, actually, I don't even know. All right, well, here. Yeah, it's referencing the P&L details. I figured that's what it was gonna be. So we'll rebuild all of those. Let's try this one more time. I just want to make sure I got them all. Dang it. Distributions. Okay, that's fine. So where was I? Oh, income statement. So on these, it's easy to get lost as well. Like when there's just a lot going on. So try to be methodical about what you're doing. Um, and I'm just trying to see, why are we showing nothing for income? So Jan 2022 is our start month, right? And month 2026. Oh, I know. So now, look at this. So global control C5 is so everything that was referencing C5 before now needs to reference, I believe that was the end month. Now it needs to be C6. So let me go here and update that. We're trying to find and replace. So anything that said global control C5 on only on this sheet, we don't want to update the other workbook because there's some references to C5 that are supposed to be there that were imported. So only this sheet, C5, that should be C6. And just on this sheet, replace all. There we go. All right, showing numbers, that's good. Awesome. Okay, great, great. Let's go back to the income statement. Now we see numbers. And let's move these up so I can see right up at the front. So subscriptions start January, and then I want these starting right in the first month. All right, so what is going on here? Not greater than C6, index, unit that, match with E2. What is it multiplying by? Unit costs. The desired profit margin, so that's fine. Why is this starting in May is my question. CE4, we fixed that one. Let's just check. So if we isolate that, what? Oh, index is I. So it's still 0. Why are we 0 here? All right, H lookup E2 unit sales D2. Right, so it should be just Here's why. In year 1, I have 0% for the first 4 months for how much of the sales happened then. Okay, so let's change this. Let's go 5, 5, 5, 5, 5. Are we over? Yeah, we're over by 5%. We'll go 15. Again, when you do this, you'll have to go in and research, and based on your plan and strategy and your specific situation, you'll have to define what your seasonality probably, or what you think it looks like. Okay, so now we have numbers at the very beginning. Good. So cost of goods sold. Let's see. This is an important one. We want to make sure all of these items are counted in the top 2 or the top 1. And we'll just call this it could be different for all different situations. We're going to call it it's basically cost derived directly from users. Like if you think every user costs you X dollars per month, so we're going to leave it as COG S1, and it could be server hosting, probably likely server hosting for your SaaS business or a portion of the business, but it's editable, so you can edit the description to whatever fits. And then here, inventory exclusive, also these are going to be black, no fill. So this one is going to be sum of everything but the top 2. And this is going to be summing up the top 2. It's really, if you've never seen this 3-statement model, it's really cool how everything ends up balancing out in the end, especially when you start to add more complexity. But again, it's all based on assets always have to equal liabilities plus owner's equity. And every item that happens, this is called double entry accounting, hits essentially if you raise an asset, you have to either lower an asset, a similar asset, or lower another part of an asset the same amount, or increase liabilities or equity. And it's tough. It's tough. I definitely rely a lot on my formal education to remember all of that, the different entries that help in building these things and making them balance. Okay, so that's fine. I'll change this to 0 if it's greater than the end month. Now we should be matched up with the cost of goods sold in our P&L detail. Let's go to other OPEX and how many items. So I've got space for 39 slots. How many do we have in here? So we did this. Oh, too much. Okay, so yeah, we can just break it up into sales and marketing, general administrative, research and development. This is going away. CapEx we're redoing from, it'll be linked into depreciation. All right, so on our income statement, I'm not going to list all, 100 some different slots for expenses. We're just going to go high level, and the first item is going to be sales and marketing, general and administrative, and these are the common, generally accepted expense categories that most all your OPEX will fit into. And then startup costs. And for startup costs, remember, you don't need to put in inventory stuff. That's all going to be calculated, or CapEx stuff. That's just like startup costs would be like legal, consulting, um, maybe a website build out, which are tax deductible when they happen. And there's all kinds of different rules for tax deductible stuff in startups. So I'm just putting it here so you can see where it is, and it's referenceable. So sales and marketing. We use the sales and marketing to figure out our customer acquisition cost as well for the SaaS portion. That's this total. And then G&A. R&D. Startup costs always assume to happen in a 3-statement model will be in the first month. So it's nice doing like a product as a service is a little bit different. So um, it takes some finessing, and I like doing a little bit of a different thing. Now, why is this sales marketing gone to 0? Do we just not have any entered any sales marketing costs? Oh, let's put one for the first year at least. Update our references. Alrighty. So we have our OPEX. We'll clear all this white stuff out later, white space. Let me make sure. And this already references, it'll end on the end month, so that's already in there. That's good. Depreciation based on our CapEx schedule. And then the only thing down here we got to adjust is well, there'll be a couple things, but the main thing is the tax calculation. So C9 and 10 are now, let's see, 39, 30, and 31 for taxes on income and CapEx, or capital gains. So 9 becomes 30, 10 becomes 31, and the rest of that, we'll get into these updates as we get through. So there's the monthly income statement. Let's check out the annual. Get our grid lines. Let's format this out to 15 with so hopefully we are all matched up here. We'll do our check, sanity check on it, which is just the sum of net income minus some net income on the monthly, should always be 0. Okay, that's good. At least all our formulas are all matched up. Freeze the panels. Make sure there's nobody saying anything. Oh, we got a couple viewers, one viewer. You guys are able to, I changed the chat, so as long as you're a subscriber, you can talk. You don't have to be a paying member of the channel. Also, note, I was looking at potentially doing a metaverse financial model. So, like, metaverse is this whole new thing where, you know, everything's connected. Kind of like, so meta is like data about data, and the metaverse is essentially data about you and everything interacting online. And there's all kinds of businesses trying to pop up. A lot of it's crypto, but it's not all crypto. And Web3 is different than the metaverse. But all kinds of opportunities there from different businesses. And I'm potentially looking to make a new financial model category around metaverse stuff. All right, income statement is good. Let's see, we can move on to the cash flow. And what I'm going to do is probably I'm going to get everything perfect. All the references making sense, matched up, and then at the end, I'm going to probably do all that inventory stuff once because it's going to be hard to do that before we have everything else matching. It's going to be confusing. So let's get the cash flow statement going as best as we can. And again, with these builds and just working on 3-statement models in general, you can't think about doing everything all at once. You have to work. It's like a puzzle, and it's a puzzle where you have to do something on this statement, then something on another one, and kind of work until you've completed everything with no circular errors. Okay, so this is pulling total revenue or customer receipts, income statement, row 11. Okay, that's good. Inventory. So we're actually keeping this now. It's actually working, which is nice. because I did integrate all the formulas and everything and remove the workbook references, so this is actually working. I mean, I might not have to, it's already there. So that's, oh, nice. That's really nice. So one reason why, this is another reason why I had to use the base three statement model instead of, I was going to use the car wash version because it has a little bit different formula set up that I like. But I had to use the base because I wanted the inventory logic, and it looks like it's all fully integrated already. Let me change this to a different number and see what happens. Let's say 3 months ahead. Go back to the cash flow. Nice. So look at that. So we're paying for Jan, Feb, March in Jan, then April, May, June. Okay, cool. Didn't even have to think really on that. So in that 32,150, if we go to the income statement, is equal to these 3 months. Yep, perfect. So that's where, so that actually hits. So, and if you want to think of the accounting that's going on behind that, you've got your cost of goods sold being recognized in that month. So that is a increased expense, which lowers net income here, which in then will lower the balance sheet retained earnings. However, all the cash is coming out right then and there. So there's got to be a reconciliation between the actual cash balance, the retained earnings that gets affected. The retained earnings is like the accrual kind of, because you're showing that expense happening in the month of the sales of the items. But on the cash flow part, in reality, all three, months are coming out, so that cash balance goes down. I'll have to see if we have to do some other entries. Let's think about this. So assets lower, equity is lower, which retained earnings is part of equity. Yeah, I think that works. And then because that, what we'll have to do here is 1/3 of this is calculated in January, or in this, actually, I haven't done this in a while, but um, the actual cash flow. So we want to do other OpEx. So this would then just not include um, the cost of goods sold items for that are being counted for inventory. So then we have our total actual cash going out. And then next period, there's no inventory hitting, And then now this is when retained earnings catches up. On the third month, we'll actually have fully saw the retained earnings reach, the effect of that 32,000 hits all 3 months, or finally accrues for the 3 months. So then retained earnings is back to matching this. And as we catch up to the retained earnings, the cash flow is actually catching up too. So we'll have to see if we have some balance. That'll be once we get to the balance sheet, we'll really get into it more. But that's always like and we're not even counting the fact that you might have paid for some of the inventory up front and some of it later, which is even more. Then you'd have to have some payable stuff, and we're not getting into that. But I have an actual three statement model that only focuses just on inventory happenings, and it does include prepayments, paying for partial, and shows all the logic. That's just a different, it's in the accounting category of smarthelping.com if you want to go see it. But that's specifically focused on inventory and essentially as complex as you'd ever need it to get. All right. Anyway, so we've got customer receipts, our inventory, other OPEX. So this, let's see what we're calculating here. 63, 15, 16. Oh, I think that's actually perfect. So 63's OPEX, and then 15, 16 are two cost of goods sold, not including this. So yeah, this is again why it's really nice to use a template because it's already doing all those references. I don't have to finesse anything. All right, so that's looks fine. Interest and taxes are fine. We'll have to update the amortization schedule with the latest, which the only thing that is getting updated is on the end month. If you select to include a terminal value and exit of the business, then the debt will automatically be paid off. So that principal amount will hit that month if that is selected as yes. So that's new logic that will be added. This is fine. CapEx is good. It looks like sale of the business. So terminal value. So this is our first real finesse that we got to do for the cash flow statement. And this is just pulling, and I don't want to use this formula. I want, let's look at the one we did with the car wash. Oh, same one. So that's fine. Oh yeah, because I went to the terminal value and basically made that the source reference to see if anything was going to pop in there. This one though definitely has the logic. So Control C6. So if it's end month and 8's yes. Okay, yeah, that one we want. And this is one reason why it was so much nicer to have the selector in here, because I can just reference that to know if I'm doing the things that need to be done if we're doing a terminal value or not. That's fine, that's fine. We're not doing dividends. Okay, so this is good. I want to go to the terminal value now and update some of this. So first, if C8 is no, then 0, right? Otherwise index, and we're going to actually index revenue, not EBITDA here in this case, which is just a different row. We're just going to take row 11. And then match it with the end month, 5. Okay. So that's annualizing the revenue for the last month, which is around $1 million. So that should be 12 million. Perfect. And this is not an EBITDA multiple anymore. We're doing a annualized revenue multiple. And actually, on this one, you could have seasonality, so we can't just take the last month. We need to take the trailing 12 months. So what I have to do is actually, let's see, we did this in the mobile app one. I have to look, I have to automatically calculate the end month and then all the months before that. Um, that are part of the, let's see, where is it? Oh, why can't I barely see my tabs here? Is it here? Yep. So trailing 12 months. This is exactly what we need to do. Take row 68. Oh, it's different anyway. We'll have to update the references. So get that in there. Don't save this. So we're checking just if the date in C5 equals, oh, if it's greater than or equal to the start month, which is C5, and also if the date here and C5 here happens to be C5 on the control tab, the same reference. And then the end month, which is C6, and 1. So it's basically saying only list the value if it is before the start month and after, or before the end month and after the start month. Which start month's always January. If we put this to say August, for whatever reason, now you can see on our dynamic piece of logic, it's stopping in August, and then we can pull. Wait a second, is this supposed to be? Hold on a second. This is, I don't care about the start month. Whoops. All I care about is the end month. So this, a 1 is just going to populate if it's in the year of the end month and in within 12 months of that end month. So now you can see, there we go. So we only want to see the trailing 12 months. Okay, so that's 109. So to get this terminal value, I simply want to say, it's real easy, sum ifs, annual revenue, which is row 11, if our value here is a 1, and that's it. There's our annualized revenue, or trailing 12 months revenue. So now you get all the effects of seasonality in there, and it's more accurate than doing just the end month times 12, because that, what if it's 0 because you have no sales in the end month because it's just your seasonality. And then annualized revenue multiple, valuation at exit, so it's 38 million. Let's make sure this is labeled. So this is trailing 12 month multiple exit value. Okay, we are cooking here. We're cooking. All right, we got some viewers coming in now today. That's good. Let's see. So income statement. And I know this is not like a fun thing, like a game or something like very exciting, but what I'm doing here is explaining how you do financial modeling in general. And it's different for every case, but if you're trying to survive in this world and make a living, and you're just coming out of college with a finance degree, this is one path. Obviously, it's my dream job. I love doing it, but if you work for a company, you're going to have to know a lot of this stuff if you want to grow and move up. and it's very good knowledge to have. Alrighty, so we've got our terminal value all hooked in. That's fine. Our CapEx. I want to make sure we actually, before I move anywhere else, let's make sure this doesn't have any weird formulas left over. That's fine. Actually, these, oh wait, yeah, that's good, that's good. Okay. What we can do also while we're on here, so we don't forget, is put in the validation for the date selection on these. The other reason why I also do this is just as a proof of quality, so you guys can see what I'm actually doing in these models and all the work that it takes to get it done. I'm hoping that the new resolution is a lot easier for people to follow along, because I know before, I think it was only going down to row 20. You could see like from here to here. And if I was doing stuff out of that, you couldn't see it, and I really couldn't tell on the fly if it was visible. Now you guys should be able to see the whole screen that I see, because I had to update the resolution. So that should be better for your viewing experience. All right, CapEx looks good. Terminal value looks good. Gonna zoom in on this a little bit. Inventory is awesome. It literally worked without a hitch. We don't need this tab. And then we have all this. This we don't need. That's fine. We'll update these references later. Now, so cash flow. Did that. That looks good. Got our CapEx in there. All right, perfect. Let's go cash flow annual. And I'm really, this is really going well as far as the timing. I'm trying to really get the timing down on this, so it's no errors or very little errors and quick. And so it takes a while to build up to doing that, right? Um, all right. So cash balance or net changing cash 4492, and there'll be other checks that check this, so I'm just doing a quick sum. Okay, so all that's flowing fine. Balance sheet. Now this is where things become less obvious. We now have an inventory balance to track for sure. Let's widen this out. Because we want to track inventory because we're actually um, using that to sell to make some of our primary revenues. So obviously any business could have inventory, but this is one where you definitely have it. It's part of normal operations. All right, cash flow. this real quick and just start from top to bottom. So that looks fine. Yep, that's good. Now this is one where I actually haven't integrated yet, so let's think about this. So inventory is doing cash flow D11. So D11, perfect. So this is saying, this is where when I was trying to explain the reconciliation before, this is where you see that 21,000. That's saying 1/3 is sold in the same month, and then the other 2/3 are for the next 2 months. And that's where we're going to balance because you're purchasing 30 some thousand, so you have all that cash going out. Only 21,000 is staying for the next 2 months. 10,000 of it is hitting retained earnings. The other 20 is in assets. So that's where you're balancing. And I'm not going to be able to T-chart for it, but that makes sense. 0, and then you can see your month 3. This is where you use your final bid of inventory, so you have none left until you buy more, and then it's the same pattern. And then this changes if I were to update. Let's say we want to buy inventory for 6 months ahead of schedule, what we think we're going to sell. Now you can see inventory starts here and depletes over time, and then resets, depletes over time. So that's great. That's working good. I know I got to update this formula with the latest type. For fixed assets. And then accumulated depreciation also needs to check, because if it's a terminal value, it's going to be included. What that means is we want to take all the fixed assets and clear those out. Take any gain or loss on those sales based on what you're defining as part of the terminal value that hits fixed assets. And so then that zeroes out on the last end month. If you hit no for terminal value to be included, then it just shows whatever the balance is on the final month. And so we got that in there. Oh, what did I just do? Ah, the reference to income statement is different, I'm sure, in this one. So we want to pull from 72 to 87. And balance sheets, again, they're just cumulative mostly, so you're figuring out cumulative balances over time. All right, that's in there. Let's update our long-term debt calc. And what I'm going to do is let's pull this debt schedule. Dang it. Come on. Get in there. Alright, so, and then let's remove all of this. Just from the sheet. Dang it. What is the problem? Oh, dang it. That's what. You got the apostrophe in there. There we go. Oh, there's only 3 anyway. Alright, so that's good, good, good. That's good. And this is the main formula that clears out. Perfect, that's working. Alright. Go back to the balance sheet. Now where are we? Oh. Debt schedule. So start month. Could be any month. And that'll give you some funding. Update this. It's just saying we want it to zero out if we're past our end month. So you can see why it's so important to have the proper positions, because all these formulas I'm moving around all reference the same position of the different workbooks. Now, why is this 0? If C5 is greater than the end month, 0, it's fine, it's not. B7 of the debt schedule, what's that? Okay, it's not. Let's just put it to February for fun. Cash flow. So we got to update the row reference. So 24 and 25 should now be 28 and 29, which is a receivable, or, proceeds less principal. 28, 29. And it's a cumulative formula as well, so there we go. You'll see the end month, it'll be paid off, so the balance goes to 0. All right. We are going on this thing, man. Let's see. What else do we want to do here? Well, I mean, I think that's pretty good. We got inventory, we got income statement, we got a lot of the tabs updated. We'll continue on this tomorrow at 10 a.m. Eastern. We'll probably get pretty far. I don't know if we'll finish, but we're definitely moving faster now. So hopefully you guys have a good one. Remember, check out smarthelping.com. If you want to purchase any of, I've got over 100 templates of all different types. Subscribe to the channel, like the video. Those are free ways to support me. And thank you to my current paying members of the YouTube channel. There's 4 of them in there. God bless them. Jeffrey, Troy, I think PJS 5000 and Human AI. Thank you guys so much. Appreciated. And I'll see you guys on the next